Shortage of liquidity led to another slow year for the real estate sector in Nigeria in 2012. Right now we speak to Olu Abayomi Sanya. He's the managing director at Goldbanc Management Associates, and he'll give us a perspective on the real estate sector in Nigeria. It's great to have you on the show, Olu. And first of all, I think perhaps the big difference between this year and last year is that unlike last year where we saw in the luxury market, prices somewhat flat. This year, what I'm hearing is that prices are actually coming down in places like Lagos. But can you just share your thoughts on the dynamics we're seeing, particularly in the luxury space?
Right, thank you very much, Wole. For the luxury, like you said, in the real estate, is actually coming up, as it were. However, the rents on the luxury side, which is a prime area, again, has actually come down. What is responsible? It's, I think, most of the takers of such luxury items actually moving away from the market, trying to go to where it's cheaper, if I may say that. And again, that also take the prices of the medium and the low side to also come up in terms of the rents, and also make them to also have the price increase in terms of values in those areas.
But stay with the luxury property. I want to get your thoughts on this. I mean, you mentioned that the prices are coming down. Does this more or less confirm the fact that some people think that that market was already overpriced, or is this really speaking more to the liquidity issues we're seeing with respect to real estate generally in Nigeria?
Both, actually, in my own view. One, that market is overpriced in a situation where you have a 4-bedroom flat at that time going for $100,000 per annum. And these days, such flats is actually going for $70,000 per annum. That, for me, it's more real in terms of what the values you get in all those property. However, again, there are no liquidity in the marketplace to actually also fund these transactions, and therefore there are a lot of flats in the marketplace that are waiting for people to take.
All right, so the banks are not coming forward with the funds, so clearly there's an issue around mortgages in Nigeria. We'll get to that in a little bit. But before we move on to that, I want to get your thoughts on what part of the real estate sector has been exciting in your view this year. I mean, you just talked about luxury space being a bit weak. What about the commercial property? What about the low-cost housing? Where exactly do you think there was value this year?
For the commercial properties, for me, we have not done well in terms of maintenance, and that has also affected quite a number of issues there, which we need to address. Having said that, the mortgages in our system, the structure of mortgages in our society is also warped, if I might say that, with due respect. We don't have a clear structure whereby we could say, yes, indeed, this is the trend of things in that market. So to that extent, it's very difficult to say that this will be the direction. But with what the finance minister has tried to champion in the mortgage market, I think that will see a better structure whereby you could actually tell where the real estate market will go along that line.
Can you just describe exactly what they're planning to do, very briefly if you can? I know it's all about mortgage refinance facility. I know the World Bank is involved, but exactly how will it work?
Right. Before now, there had been an absence of secondary market in the mortgage industry. In other words, we don't have where mortgage institutions, like the primary mortgage institutions, where they can actually refinance all the loans they've created. And therefore, there's the absence of the liquidity provider that will give you a kind of a succor after you have actually created those assets.
Right.
Now, what they're trying to do is to create that secondary market, whereby when any financial institution, any at all, even if it's a commercial bank or a merchant bank, when you have created those mortgages, you can actually go into other institution who is ready to actually refinance your position as long as you you meet the underwriting standards that that particular liquidity facility.
Very quickly, what in your view is the likely impact of this for Nigeria's mortgage sector?
Oh, great! It's going to be wonderful, wonderful for individuals, wonderful for people who are working who cannot buy houses outright, wonderful for quite a number of civil servants as well, who might be able to have access to mortgages for 25, 20 years, and they'll be able to actually plan even their finances. Not only that, it will also reduce corruption in the society, because once you have shelter over the people, what you have, the people are not really interested in how to get involved with all these corrupt practices which we find in our system.
But in very few words, do you think that is going to lift the real estate sector next year? We've seen another weak year this year. You think it's going to happen?
Oh yes, I strongly believe that it will. It will.
All right.
It will. Mind you, not just the facility, liquidity facilitator provider that will be there. You also have the likes of Federal Mortgage Bank, who will also be doing the same thing in other directions. So if you have two institutions already taking off with that kind of act, what you have, it's a boom in the market.
Hopefully some exciting times coming to Nigeria's market sector. We'll leave it there. Thank you so much, Olu Abayomi Sanya. He's the Managing Director at Goldbanc Management Associates, giving us his thoughts on Nigeria's real estate space.